Guys, Cam McClellan,
Lewism,
Michael Beresford. Welcome to today's Wealth WOD. We've got Michael here today, so we're going to take advantage of his time and we're going to grab a bit of information out of him. A lot of people ask about holding costs. One of the biggest factors of holding costs with holding a larger asset base is ensuring you're getting your tax back to assist with that holding cost. So I want Boz, if you can talk about tax variations, so withholding variation forms, and how you go about ensuring more asset for little money out of back pocket.
What they are and how they work. Go for it. Great. Tax variation forms, guys, are the jewel in the crown of your cash flow for your property portfolio. What they are is basically a form that allows you to get your tax benefits throughout the year. So really simple example, let's say that your portfolio gives you $12,000 back in that year. There are two ways that you can get that 12 grand. You can do it the way most people do it, which is pay extra throughout the year to then get your 12,000 back as part of your tax return. The smart people, the savvy property investors, will have a tax variation form in place that if you get paid on a monthly basis will give you $1,000 every month throughout the year. So you don't get the lump sum in the tax return, but you've had the cash flow throughout the year, and it's not rocket science that it's far better for you to be getting a return on that money through the year than the government getting a return on that money through the year.
So is that TAB money, boss?
You've got to make sure that it doesn't go to shirts and shoes and WOD t-shirts and TAB. What it does go to is into the account to cover the holding costs for the property.
Thanks for clearing it up.
Don't give it to Beth. You won't see it again. Yeah. So in terms of how you actually do it, if you want to have a tax variation form set up, very easy. An online form that you or your accountant can put in place. Be conservative. You don't want to be overestimating the deductions and then having to pay money back to the tax office at the end of the tax year. Be a bit conservative, but you lodge an estimate of what you think the deductions are going to be. The tax office will then approve those deductions as being reasonable, shoot your payroll department a template letter that says this is what your new tax rate is, and you see the extra grand a month, for example, when you take home about 4 weeks after you lodge the online form. So very simple and well worthwhile.
I hear you telling people, Boz, regularly, our clients come in, you talk to them about investment and the journey should be enjoyable. And I think what that means is don't bust your chops waiting until the end of the year for your tax to come back. Do the smart things. Get it so your cash flows there month on month. You can enjoy yourself during the process. You're not scratching the bottom of the barrel every month to make sure your payments and lifestyle are covered.
Yeah, it's a good point. Right. Hey, mate, can you do a quick pie graph just to show people what the percentage split is for holding costs for rent, tax and you, so people can actually visualise how much tax you're going to get back or how much they'd have to cover if they didn't put in that variation form throughout the year?
Yeah, sure. So looking at a standard economy investment, on today's interest rates, you're looking at a split something along the lines of this. So rent would typically cover 65% of the holding cost. You get a solid yield, that's a large chunk. The tax that we've just talked about will vary depending on your taxable income, but it's going to be a large chunk. It's going to be generally about half as much of the rent. So if your rent's 20 grand a year, then the tax benefits per property will be about 10 grand in year one. And then this small slice here is the shortfall that you guys kick in. On today's interest rates and so forth, I'm going to say $50 a week just because you know that I'm conservative, but it's going to be more like somewhere between 10 and 30 if that.
What happens in year 3, boss?
So year 3, then if you haven't got this, if you bought well, then the rent's going to increase. So that'll generally go to 70 to 75%. You're still getting solid tax benefits. I'm going to write 25% plus here. The reason for the plus is because the rent plus the tax is actually going to be giving you a positive cash flow scenario where you're not kicking in anything. So that goes away. And the positive cash flow you generate from the first property just goes into the bucket to help you cover the slightly negative holding cost in year 1 on the next property.
Cheers guys, stay tuned.
Enjoy.
A little bit more Boz magic coming your way.